Welcome back, YouTube fam. Today, we're spilling the tea on Celsius Holdings, the new beverage company that is taking the market by storm. So buckle up because we've got some juicy details to unpack. Let's start by zooming in on some key metrics. Celsius Holdings' price-to-earnings ratio on a trailing 12 months basis is at a prime 101.08. Looking forward, the PR is forecasted to drop to 52.48. Suggesting a potential excellent future growth prospects for savvy investors. And don't forget about the price-to-earnings growth ratio or PG ratio, which stands at a tantalizing 6.55. Remember that a value around 1 is when a stock is considered undervalued, so this high number can suggest a highly overvaluation to his growth prospects. Now let's talk about returns. Celsius's return on equity is a respectable 23.22%. While the return on assets comes in at a solid 16.44%. Those are the kind of numbers that make investors do a happy dance, suggesting how efficiently Celsius uses his shareholders' equity and company assets to generate earnings. And with an earnings per share or EPS of 0.79, it's clear that Celsius can be stranger to profitability. In fact, the EPS is projected to grow at a rate of 15.42% over the next 5 years. Adding even more sizzle to this already hot stock. Now, let's dish about those earnings, honey. We're seeing a roller coaster ride here, folks. Picture this: flatline, and boom! A sudden surge. EPS and free cash flow per share were chilling like ice cubes until 2022, then BM. They skyrocketed with compound annual growth rates that'll make your head spin. But wait, there's more. We've got a no-dividend policy here because Celsius is all about that reinvestment life, pouring those earnings right back into the company's growth potential. Talk about putting your money where your mouth is. Now, let's talk margins, baby. We're looking at operating and profit margins that'll make your eyes pop. Celsius is running a tight ship with solid numbers to back it up. But hold on to your hats, folks, because we're not done yet. We've got revenue and earnings evolution over the past 8 years that'll make you want to do a happy dance. Revenue's been on a steady climb, but earnings? Well, let's just say they've been a bit more unpredictable. But hey, that's what keeps things interesting in the market, am I right? Investors do not seem to care about this instability, since in the last 5 years it has had an incredible total return, far exceeding the VO. Now, let's crunch some numbers. Debt equity? CELH, nada, zero. Celsius is keeping it clean and green on the balance sheet. And don't even get me started on that average price return over the last 52 weeks. It's like watching a rocket blast off into the stratosphere. But here's the kicker, folks. Analysts are predicting some serious gains in the next 12 months, but I'm here to keep it real with you. My gut says we might be looking at a bit of an overvaluation here. I'm seeing a fair value that's a tad lower than what the analysts are throwing around. So, what's the verdict? Celsius Holdings is bringing the heat, no doubt about it. But just remember, folks, always do your own research and keep a cool head when diving into the stock market frenzy. If you enjoyed the video, don't forget to like, share, and subscribe for more financial adventures. Until next time, happy investing.